All right, so today we are just looking at one thing pretty short, and that is interest-only loans.
I was confused for a second.
All right, so for interest-only loans, you would just pay the interest that's earned on it, so the balance doesn't go up or down, it stays the same. So for that to happen, the loans where the repayment, whichever one you prefer. Think about it, but is equal to the interest earned. Alright, so if you've borrowed $50,000, then you always owe $50,000, and whatever the interest is on that, that's how much your repayments are. So as I said, hence the amount you owe. The amount owing remains the same. Alright. So for interest-only loans, the recurrence relationships would have the following. So your payment is equal to your interest earned and so your payment, we're using the letter D for our payment, will be our interest earned, which depends on our rate of interest. Turn that into a decimal by dividing by 100 times by our principal. So where D is our payment, R is the interest rate per compounding period, and V naught is our principal, how much we borrowed in the first place. Alright, so let's do an example. Alright, I'll write the example down and then give you some time to get it into your notes. go, or we've got that, have we? All right, so we've got Mr. Spacely borrowing $180,000. So that would be our principal.
Oh, I do feel off
All right.
previous recording.
So we got 180,000 borrowed. That's our principal of our loan. Interest only rate 7.6 compounding fortnightly. So that's our little R, but we need to take the fortnightly into account. And then we can work it out using this formula. All right, but what I want to do is I want to show you how you can do it using the calculator financial part. So when we have something like this and we're looking at what the payment is, so this is for interest-only loans, and being the number of payments, it doesn't actually really make any difference to this, the calculation as to what you put for that. But what you can say is, all right, let's look at n equals 1, because it's asking for fortnightly payment and it's compounding fortnight. So it's 1 fortnight that we're looking at. So you can use n equals 1. All right, so indicates 1 fortnight, and that's what we're after, how much you would pay each and every 1 fortnight. And so our interest rate, if we're using the calculator, we don't have to worry about changing it for the compounding period, because the calculator's going to do that for us. So it's 7.6. Our present value, positive or negative?
Negative.
Positive or negative?
Oh, it's positive.
Positive, because he's got the money. Mr. Spacely borrowed that money, so Mr. Spacely gets the money, so it's positive. The future value, this is the interesting bit. What's the future value going to be?
190,000.
Positive or negative? Negative. All right, because he's still got to give the bank back 180,000, so it's got to be negative. All right, so positive, because he got the money, and negative here because you owe the money. All right, and that's kind of why I wanted to use your calculator. Just, again, highlight whether it's positive, getting whether it's positive or negative is key to it. All right, what about our payments? How often do our payments?
26 times in a year.
26 times in a year, each fortnight, yep. So our payments per year are 26, and our compounding per year is also 26. So then we go to our calculator. And to our financial, which is there, compound interest, number of fortnights I'm interested in is 1, 7.6%. Mr. Spacely's got 180,000 from the bank. Payment's what we're after. He still owes 180,000, right? Interest only loan. The size of these, the 180,000's got to be the same for an interest only loan. You always owe what you borrowed. 26 fortnightly payments, and it's compounding also fortnightly 26 times. So you can either put your cursor in here, click solve, or you can just click the button And so the fortnightly payments on this would be,
$526.
and 15 cents. Yep. So he pays $526.15 each fortnight on this interest-only loan. All right. Anything in there that people need clarifying? All right. So interest-only loans. These two figures the same always. All right. Because it's a loan, the money comes to that person who's borrowing, it's plus, but they still owe, so they've got to give that back, and so that's negative. All right, that's it. 9D. Like and subscribe.